Welcome to Financial Issues, where we help you steward faithfully by honoring God with your investments. Now listen in as we give you the practical tools and advice you need to become a biblically responsible investor.
This is Financial Issues, where we help you defund darkness and fund the light by investing with biblical integrity. Folks, great to be here with you. Seth Udinsky, Sam Case, and drum roll, please. He's back. Your host, Mark Manila. Mark, welcome back, brother. It's great to have you.
What a blessing to be here. Thanks.
Absolutely. We're so grateful for you, Mark. And just wanted to give you the chance to say hello to everyone again and to ask you how you're feeling. And man, it's just great to have you back. We really missed you, brother.
Well, on the mend, I got to say, probably the weirdest thing is my voice. In my head, it sounds like a cartoon character from them putting that thing down my throat, intubate me, during surgery. I never expected to be hoarse from it, but they say it could last a couple of weeks. So get used to the new Wolfman on Financial Issues.
It adds character.
It does. Well, and the worst thing about our line of work, folks, is if something happens to your voice, that's like all of it, because we get paid to talk, Mark.
Yeah, exactly.
Well, you sound great, brother, and it's great to have you back. And Samuel, great to have you as well, my guy. We made it back to Mark again. So, we're so grateful for you all, folks. Hope you'll join us. Call in today if you want to say hello to Mark again. 610-363-1110. You can give us a call right now. 610-363-1110.
If Mark's voice gives out, he's going to sign language to us.
That's right.
We'll interpret.
Exactly.
Which basically means we'll just make it up.
610-363-1110. Folks, our preborn campaign continues to march on. You all have done such a great job with this. Also, the Trump administration is rolling out some new workforce Pell Grants. We're going to discuss that in a moment, as well as your calls and questions. I do hope you'll call in today, folks. The number, again, is 610-363-1110. First and foremost, though, guys, Mark, this was something that happened while you were out, but we wanted to get your take on it. The 30-year Treasury yield topped 5% a couple days ago. Sam, give us the details here. What's going on?
A lot of people making a big deal about this, so I thought this would be a good time to talk about the whole idea of Treasury yield specifically, but let's look at the numbers. So it's 5.13% as of last week. It might have gotten even a little bit higher in the meantime, and that's the highest level we've seen since 2007. I think as of this morning, it's the highest since 2006, so it is continuing to go up there. Still, it should be noted the Treasury yield is much higher than it was in 2020. That's when it was around 1.3%. But by and large, it's still so much lower than what we were seeing in the 90s. That's when it was about 8%. I think in the late 80s, it was up there around 9%. So the question is, Mark, what does the Treasury yield tell us about the overall health of the economy?
Nothing. No, sorry. No, sorry.
We missed you, Mark.
Actually, it doesn't tell us about the economy. It tells us about how people are experiencing life right now. When people get uncomfortable, when they get insecure, they want to be paid more for their money. If they're going to lend money to the government, they want to be paid more. They're feeling insecure. They don't feel like the government is controlling its budget or the economy. It could be multiple things of risk that are piling on their shoulders. And right now, we know there's a lot of different things of risk. For example, we know the government doesn't have its budget under control. We have deficits. We're spending more money than we're bringing in. We have outrageous amounts of trillions of dollars that we owe. So people are uncomfortable about that. People are uncomfortable about war. Imagine that, being uncomfortable about war. People are uncomfortable about the cost of living. As much as I want the cost of living to be reasonable and give Trump credit, we're seeing that the run-up during the Biden era, and then even though inflation has come down, we're seeing a little more gain in inflation again, which means from the plateau that we hit in the Biden era of way up above us, where we had to get ladders to get something off the shelf to be able to pay for it, we're now having to climb another step or two. It's bothering everybody. So there's a lot of fatigue, then there's the media telling everybody life is terrible over and over again. And very few people like Financial Issues saying, count your blessings. We are so blessed. We're living like kings. We're living better than Solomon. there's the difference is so huge. So all it's saying is people are insecure about lending the government money. They want to be paid better for it. If they're going to buy into longer term bonds, then they want to be paid for that risk of the possibility of interest rates rising over time and causing a devaluation in the bonds that they're holding. So that's all that's telling us, is there's insecurity in the market. Doesn't tell us how the economy is doing. The economy could be broadening, it could be growing, and that alone could cause people frustration because trying to keep up with everything that's going on. It doesn't tell us what's happening in the economy. It tells us how we're experiencing it right now. Long answer to nah, nothing.
That's good. Well, Mark, I'm glad that we're talking about this. And Sam had posed this question in our pre-show meeting yesterday. It's a good one. Could you tell us the relationship between the Treasury yield and the stock market? How do those things work in conjunction together?
And then again, nothing.
Nothing. Yeah.
There is no relationship.
Yeah.
Bonds don't like stocks, and stocks don't like bonds.
Okay.
No. The reality is that there are times that people call normal where the bond market is reasonable, not high yields, not underpaying people, and the stock market is growing. But the reality is, even if the bond market, even if the yields are rising in the bond market, obviously the stock market could be growing immensely, because when we see yields rising in the bond market, remember the teeter-totter. If yields are going up, it means price is going down. People are paying less for bonds, therefore the yield goes up because the payout remains the same. For example, if the treasuries were issued 30 years treasury and they were paying $50 per bond, if people, and that was at $1,000 per bond, if people paid $500 per bond, they'd be making 10% instead of 5%. So by paying less for the bonds on the open market, you increase the yield. Now, a lot of people don't get that. They don't understand it. And maybe we should go into it one day and just do how the bond market works. But the bottom line is that there's risk on that. And there's normalcy. Some people call it normalcy, where bond yields are okay. People are comfortable with where the bond yields are, and the stock market is doing well. To me, that's an unusual time. In my life, I've never understood why people would say there's any direct relationship. Now, if yields get real high, I even think 5% might cause, and we're seeing it, might cause additional money to be going into the stock market or into the bond market, pulling it away from the stock market. Because somebody's saying, hey, I can get 5% with no risk. Why not? So they pull their money out of some high yield stock and that's paying a 5% dividend, and puts it into a bond that's paying a 5% dividend. Why not?
Lock it in.
Yeah.
Yeah, absolutely.
So that's what happens when, I guess that's what when you ask, what's the relationship? Well, the relationship is yields get high. Some people might pull out of the stock market and just go to safety.
Yeah,
yields get real
that's
low.
a relationship for sure. That's kind of the thing we were asking about, is how do they interact with one another?
Yeah, if the yields get too low, then people get out of bonds and they go into hopefully strong stocks, and stocks with good free cash flow. And I bring that up because we've been talking about the new Timothy plan ETFs and free cash flow ETFs. They use one of the financial issue steel measurements we use, free cash flow. Is it growing or is it decreasing? Is it a good amount? By using that, they're finding stocks that have the ability to grow and are on solid ground. So if you're going to move from bonds, you want to move to something safe. Well, free cash flow would be one of those calculations you'd have for the stock, moving from a bond to a stock market.
Good stuff,
Just
Mark.
like the Timothy plan, two of the Timothy plan funds.
Yeah, absolutely.
New ETFs.
Glad you brought that up, Mark. Timothy Plan, pioneers of biblically responsible investing. We're so grateful for them in part sponsoring today's show, and just so thankful. Folks, you can check them out at timothyplan.com. Again, that's timothyplan.com. And check out those new ETFs. 3 new ETFs out, Mark. So exciting times for Timothy
And
Plan.
the one that nobody's talking about, the fixed income one, that's the one I'm more excited about than anything else. I can't wait to get it all into our partners back into the income and the growth in income portfolios, because we've always been lacking in bonds in those portfolios. We've had income, but not a lot of fixed income without using some outside mutual fund that could change at any time from its biblical responsible rating. This one won't. And I'm excited about that. Just like I'm excited about being back here with you. Why don't you give me a call? I'd love to hear from you, hear how you've been over the last 3-4 days, and see what you're doing in your portfolio. 610-363-1110.
My wife and I, we moved into this neighborhood. We had some experience with Crossroads Kids Club. We had served at another club. We kind of thought to ourselves, like, it would be really, really cool for us to actually bring in a club that was able to share the love of Jesus with kids directly into the school. And so we started our Crossroads at Hilltop.
Crossroads is amazing. You can learn all kinds of things about God. That He loves all of us. He died on the cross to pay for our sins. That He will help me in every way.
There is just such tremendous opportunity to reach kids in some of these areas that just aren't being reached.
Sometimes I pray every night. When I feel alone sometimes, God is right there sitting next to me. I can rely on Him no matter what happens.
Help reach kids with the hope of the gospel. Visit reachOurschools.com.
Growing up, my dad taught me so much. In everything we do, we have an opportunity to bring God glory. It's why I connected with Financial Issues Stewardship Ministries. I wanted to glorify God in how I manage and invest my money. I'm gifting a Financial Issues partnership to my son so he can honor God in everything he does, including how he invests.
For more information on how you can gift a partnership, go to financialissues.org/gift.
At Financial Issues, saving babies has always been a part of our calling, because every day women in crisis are making heartbreaking decisions. But when a mother sees her baby on the ultrasound, everything changes. And right now, your gift can go twice as far, because every dollar you give is matched, doubling the number of ultrasounds and ultrasound machines provided through Preborn. Give today at preborn.com/FISM or dial pound 250 and say the keyword baby.
Folks, as Mark said at the end of that segment there, give us a call. We'd really love to hear from you. 610-363-1110. Call in. 610-363-1110. Mark, Sam, it has been, as we've said these last couple days, just a fantastic campaign with Preborn this May. We are ahead of schedule, which is awesome, but we need to stay ahead of schedule. We need to get to this $280,000 goal. Gentlemen, as of this morning, I'm pleased to say that we're at about $210,000, just south of that.
Wow.
It's awesome. So we've got, really, Mark, we have about 70,000 to go. And I'm sure there's one listener or several listeners out there who might consider giving a gift that could cover all of that today, maybe even by the end of the show, quite frankly.
Wouldn't that be awesome?
It'd be amazing. It'd be really
First of all, I'm totally blown away. $210,000 from our listeners already.
Yeah.
It just shows their commitment to stewardship, to honoring God with all they have and all they are. And that's what stewardship's all about. A lot of people think stewardship is what you do, but it's not. It's how you live. You're living like you truly believe Jesus Christ died for your sins and rescued you from hell, and that you have surrendered yourself totally to Him. That is incredible. You're living it out, and you're showing the world right now by your donations to Preborn that is true. It's not just how you invest your money, but it's what you do with His money that He's entrusted to you. And you're saying, hey, Here's a purpose that is a God's purpose to save babies. Here's a purpose that honors God. I'm gonna take what he's entrusted to me and donate it to this company that is going to reach out, introduce babies to moms, and then help them financially if needed and spiritually with the gospel. I mean, this is an organization that is impacting the world for Christ, and we get to participate. And you have all been proven yourself to be true stewards by the way you are giving of what he's entrusted you. We have an arbitrary $280,000 that obviously our leadership believed that we could meet you and me, and we're doing a fine job, but we got 70,000 more to go. And just remember, every dollar that's donated turns into $3. This is so Christ-like in itself, how God multiplies everything good. And I just love it, So every time you donate $1, it's doubled by an anonymous donor. And then it's tripled, and they donate to financial issues on top of that. It just blows me away. I love it. I just love it. So if you've given and you've given all you want, you believe God wants you to give, thank you for that. If you haven't, let's finish well. Let's finish this campaign strong. Let's blow through the gates and show our Lord, our Savior, our God, our provider, our source of everything good. We believe in him. Let's donate today, like Seth said, not tomorrow, not when we die, but today.
Absolutely. Mark, I was talking with a family member of mine, and we kind of got into this conversation of planned giving and how it is absolutely a wonderful thing to set up giving for when you die, for when you pass away. But this family member was saying some really wise words, and they were telling me, you know what, I want to try to give as much as I can while I'm still alive. And Amen. Part of that, Mark, is because then you get to see and experience the blessing of
you get to participate in God's great work.
Absolutely. Yeah. And it's not like you're not going to know what happened when you get to glory. Like, you'll see that for sure, but you'll be beholding the face of the Lord in glory. So probably won't care too much what's going on down here. But if you give during your life, you'll be able to experience it, Mark. And so it's a wonderful thing. Mark, you had said this whole idea of the multiplication of it. Isn't that a beautiful reminder? In the stewardship relationship, our faithful efforts, our imperfect, sometimes futile, faithful efforts nonetheless, God multiplies those. God is the one who makes it great. And so that's what he's doing with this preborn campaign. You might give a little, folks, and that's great. And then God's going to multiply it. He actually already has through this generous anonymous donor. So it's amazing. Yeah, preborn.com/FISM. Mark, we've been seeing a lot of folks as well have great success with giving through non-traditional ways like gifts of stock and QCDs. And so I would encourage you if you're looking to do
those
that,
are great ideas.
Yeah, please do it. Meg at financialissues.org is the person to reach out to on our end if you need help with that. And then you can also just send those donations directly to Preborn. Just make sure that somewhere it's documented that this is for the Financial Issues campaign. So let's hit this goal today, folks. Amazing stuff.
Amen.
Yeah, absolutely. 610-363-1110. 610-363-1110. Guys, let's talk for just a moment about these workforce Pell Grants here. Sam, what's going on with these? The Trump administration's rolling these out.
This is kind of cool, right? So this is like kind of a scholarship for job certification, job training in order to bring the domestic workforce back online, full and booming. These workforce Pell Grants are coming out in a couple weeks. The program will help Americans train faster for in-demand jobs through these short-term training programs and classes in as little as 8 weeks. You can go from unskilled to skilled is what they're saying, and begin your process for doing some sort of labor that will be productive for the country. Things like HVAC technicians, carpenters, electricians, other things like that, but other things as well, including manufacturing and healthcare on top of all of that. So yeah, kind of like a scholarship, a mini scholarship for the trades. That's what it sounds like. What do you think, guys, about that?
I think it's a good idea. And at the same time, don't we already have that? I mean, I always thought we had some sort of, I guess the Pell Grant pays for it, which is different maybe, huh?
Must be.
That's the only thing I can see different. We've always had trade schools. Well, not always. I guess for a while during the Biden era, they got rid of them all, didn't they?
Yeah, they were trying to, for sure.
Yeah, so I think it's an excellent idea on one hand. On another, I see another place for waste.
That was my initial
and
thought
waste.
of this. Is like, on paper, I really like it, but always when we're giving out money, I'm like, how's that actually going to play out?
So how many Somali trade schools are opening right now in Minnesota?
That's right. It's exactly right. No, I'm so glad you said it, Mark, so that I don't have to. Because, yeah, I mean, honestly, like this, at first glance, Sam, you said it. It seems like a good idea. And it kind of feels to me, guys, like this is a pattern we're seeing with the Trump administration. I have loved what I've seen with the Trump administration for the most part. But occasionally, they've kind of done the whole, hey, let's provide a government solution for a problem. It's a good. The intentions are good. But again, shouldn't this be something that it happens naturally in the workforce, or maybe from generous people who want to sponsor, rather than the government being the one to do that? Like you guys said, it seems ripe for fraud, ripe for it. So.
Well, anything the government does is ripe for fraud because they don't have the checks and balances built in.
It's a giant piggy bank.
Of all the bureaucracy we have, they can't follow the money of the projects they do. If a business was ran like that, they'd be out of business within a week, and the owner would be taking home probably $1 million because they didn't use it for anything but padding their pockets. But the government doesn't let businesses run that way.
Yeah.
Why do they let themselves? Why do we let the government run that way? We need to start holding the government accountable. You and I, the voters, not just voting people in and out, but why they're in. We need to say, hey, you write a bill, you have to write the checks and balances into it. And if they're not efficient enough, it needs to come out of your pocket, not ours.
Absolutely. So, Mark, here's maybe a follow-up question for you then. I think all three of us can probably agree that we feel at least a little bit skeevy about, the government doing something like this. What would be the solution? I mean, are we just thinking, okay, if there's a generous donor out there who might underwrite these things, or would it be best for, kind of the idea of apprenticeships to come back?
Well, and we're already spending this money on, Pell Grants are typically for college. So we're already spending this money elsewhere.
Right. So,
on basket weaving.
Exactly. At least this would go to something.
This is something
probably productive.
The thing I didn't like about it was reading in as little as 8 weeks. Well,
that's what they were claiming. They're like, in as little as 8 weeks.
I don't want the person coming in after surgery having only 8 weeks of training to take care of me. I don't want the electrician that's rewiring my box, electrical box, to only have 8 weeks training. I want them to have more than that. And I know they do, and I know this is just to get them in the workforce.
Yeah, I think they're trying to get, that's how long one of these certificates often takes place. But you usually have to stack those. It's not just one. You get multiples.
And it's a good thing. I think the trades historically have done well at mentoring people into carpentry, electricians, things like that. I think they've done a good job. I think they could do better. They could do a lot more training and recruiting and paying them to get the training. And, I remember, and I can't remember what company it was. Oh, Sears Roebuck. What they would do is they train all their employees. You'd come in and you'd be a part-time salesperson in the kids' clothing department, and they'd start training you to be a manager of that department. And then they train you to be a manager of that store. And then they train you to be higher up. And they train people through the works there from nothing to being a manager of like Missouri's Sears Roebucks. And it was really great. McDonald's did that in the early days too. So mentoring is a great way to bring people from having no education in business to running serious stores and serious organizations.
And it works a lot of investment in the company too, because you see a path further up and further in.
Right. So you were earning a living, working there, and they were giving you the schooling. They actually did it, would give you packets of stuff to learn. I know this because my dad worked at Sears when I was a kid. And he became a store manager, then he became a major store manager. It was amazing that he went from part-time sales in the evening to help feed the boys, and then he became a manager after a while, and then he became head of IT for the area here, which was really weird, because his education was high school.
Wow.
Yeah.
It just, guys, it really goes to show you, the people best equipped to be able to do this stuff that the administration is trying to do is the people themselves. It's the companies themselves being able to have the freedom to be able to do it well. I love to see that, Mark. That's such a cool story to hear about your dad, and can be encouraging too for folks out there who are listening. The American dream is still alive. You can work hard, and if you put your mind to it and work hard enough, you can do a lot of things. You really can.
Yeah.
So.
Yeah. And it's just a change in attitude. Instead of looking to the government, quite frankly, business is dangerous and can be very self-centered and only for 12 guys on a board of directors. But we can overcome that with good companies and a good godly base. 610-363-1110. You probably have some thoughts on this. Give us a call. I'd love to hear them.
.com/FISM.
You're careful about what you bring home when shopping, especially when it comes to feeding your family. Shouldn't your investments work the same way? At Timothy Plan, we offer a wide selection of mutual funds and ETFs that can help you allocate assets without compromising your values. From technology to healthcare, energy to real estate, our funds are not only diverse but uncompromising to your values. Timothy Plan funds are filtered to avoid companies involved in abortion, pornography, human trafficking, and other harmful agendas. What you invest in should reflect what you stand for. Are your investments bearing good fruit? What's in your portfolio? Contact your financial advisor today to find out, or contact Timothy Plan directly at 1-800-TIM-PLAN to discover more. Before investing, carefully consider the fund's investment objectives, risks, charges, and expenses of the investment company. This and other important information can be found in the fund's prospectus. To obtain a copy, visit timothyplan.com or call 800-846-7526. Read each prospectus carefully before investing. Investing involves risk, including the potential loss of principal.
610-363-1110, folks. Give us a call, 610-363-1110. Hey, Mark, really interesting conversation in that last break that bled over into our break as we were talking off the air there. Could you explain, Mark, what was, you had mentioned Sears in the last segment there as we were talking about kind of this organic growth within companies, and Sears kind of being almost like a parable of sorts of how to do it right at first and then ended up falling. I think the Sam said there's 5 Sears stores left in the country.
They're like giant pandas out there in the wild.
Yeah.
It's a novelty to see.
And they're not true Sears stores either. Sears is gone.
Yeah.
So, Mark, what happened to Sears, and what was the thing that caused it to kind of die?
Well, what happened was the educational world got into Sears. Sears used to raise everybody up from inside, and it was always client-oriented. It's really amazing how quality and care brings more and more success to companies. And as soon as you start focusing internally, how you start eating yourself and destroy yourself. That's what happened with Sears. I saw it. My dad started at Sears as a part-time salesman to make a little extra money to keep us boys in blue jeans, his kids in blue jeans. And it was... they started sending packets home on him to train him how to be a manager. And he became a full-time, he left his cookie truck, delivery truck, to become a full-time sales guy at Sears. And then he became a department manager. Then they trained him to become a store manager. And then they trained him in, believe this or not, in the 80s to be their IT guy for this local area here,
Wow,
for the stores.
That's cool.
Yeah. And it was, he's the guy they'd call at 3 a.m. and say, hey, our computers aren't working, So, and he's not a computer guy, but they trained him in all these things. They raised him up. He felt cared for, and he felt like he was in an environment that wanted him to succeed. And he did succeed because of that. When they started peaking, becoming really big, all of a sudden they started requiring, some MBAs got in Chicago's tower that they built and decided from now on, if you're going to manage a store, you're going to have your MBA. And, like my dad had a high school a certificate, and that was it, So all of a sudden, you couldn't raise people up from inside because they couldn't go to school if they were working full-time to care for their family. So all of a sudden, what you got were people coming out of college who didn't know about the Sears caring for clients and the whole idea of satisfaction guaranteed or your money back, looking out for mom and dad and the families. And so families felt like Sears was part of their family. I'm going to go to Sears for a tool because they make tools that if I break my screwdriver, they're going to replace it. I'm going to go to Sears for my photos and for my Christmas shopping because they're going to take care of us. Well, now the MBAs are running the show, and the MBAs don't embrace that. They weren't raised up from the bottom up, cared for, and taught to love on the clients. And now satisfaction guaranteed or your money back goes away, and now all of a sudden there is no logo like that. And families start realizing, I can't bring stuff back if it doesn't fit anymore. I can't do these things that they use. They don't care anymore. And the store started going down the tubes. It just became crazy when the focus went to processes and business planning from caring for the client. Bottom line, Sears grew to be the biggest retailer in the world by caring for the clients. And then they dropped like a rock because we got educated business people who took the focus off the customer and put it on the process and the internally on the profits of the people in the company.
Why have customer satisfaction in reality when you can have it in theory, right? That's what those
right.
MBAs.
Well, I think a lot of MBAs believe that there's enough people out there that you can lose all the customers you want and you can replace them easier than you can by just caring for them. So they're losing the focus. We're seeing that in everything, in healthcare, in almost every retail environment. People don't care. They're doing their job. They have a process. Here's the process I have to go through. Check this box, say this thing, sign this. Okay, bye. That's it. I don't know about you, but I haven't felt like I've had any quality service in probably the last 10 years from anybody. And I'm working, I'm remodeling my kitchen and I'm working with a bunch of different trades. And I got to say, one or two people are good, but the rest is all sales. And as soon as the You sign on the bottom line. It's hard to get a hold of them. It's, we'll be there between 9 a.m. and 9 p.m. next Thursday. Just stay home and wait for us.
I would think the only exception where I've had good service is at restaurants, which makes sense because they're working for my tip. I can actually give them more money. So, we love to complain about tipping culture because it can go overboard. But you got to think it does provide that incentive to give that extra level of quality service.
Yeah, exactly. I'm looking forward. I saw a commercial the other day, and it showed this guy received something, like he'd order online. He received the package from the company, opened it up, and it was broke. And he wrote a letter to the company and said, I'm so disappointed in this, blah, 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 blah. And then it shows the guy who founded the company. He gets a new one. He repacks it himself. He puts it in a box, and he starts trekking out with a backpack to go to this guy's house, and he treks across the mountains and the valleys and, through fire and rain, and he gets there and he delivers it, and I thought that is so silly, and yet I love it. If there is a company, if there's really a company, most times if you'd write a company like that, they'd say, we're so sorry, please watch your credit card for your refund. They just don't care, They don't care about the time you have into it. They don't care about anything. I heard just recently about, I won't bring this up because it's people we know, but they went to a main store and they got a defaulty product, and the store said, well, just repack it all up and bring it back. And it's like, wait a minute, I spent 8 hours unpacking it and utilizing it to find out it's defaulty and it's got problems. But I mean, their attitude was like, so what? Just pack it up, bring it back.
That's your fault for buying our faulty product. You should have picked a working one.
Yeah. Instead of sending 2 young men out to clean it all up, fix it, and make it right. Yeah. You do that once for somebody, and you have loyalty for a long, long amount of sins that you could commit.
It's true.
I'm waiting for that one company again. I want to find that one company that does it right, that says we care and proves it. You get on the phone, somebody answers the phone. They don't waste 40 minutes of your life because they don't want to hire somebody to take your question and understand what you're talking about, transferring you between queues and queues and queues, and then hanging up on you. I want to find the company when I call. They answer the phone and they help me and they do something right about it. Yeah, I'm whining. Maybe
no, Mark, I think you're exactly right. I mean, look,
if I find that company, I'm going to invest in it.
That's right, exactly right.
It's part of it, though. So, you're going back to the Sears example. You had a way for people to go up further in the company. So again, it's about incentive structures. The people who worked there had an incentive to work really hard because they saw a way that they could, get promoted and get promoted on top of that. After they brought the MBAs in, it creates this wall. There's really no point to work all that hard because you're only going to get
the MBAs had no life experience caring for people in a retail environment. All they had was statistics that show they could lose 30% of their customers and still make a better profit because it costs less to get new customers than it did to care for the existing ones. That's the craziness of what goes on in business right now. Oh, we can offer a faulty product. It doesn't matter. The lawsuits will cost less than we'll make by having a cheaper product. I mean, I've seen these things. I've read these stories. I've lived them. Give me a company that does it right and does it on purpose to care for somebody, that the client comes first in all things, and I will invest in the company. I will shop at that company. I'll find a reason for their product,
Absolutely. Mark, I was so grateful. Last week I had to get some trees cut down because they were dead and hanging over my neighbor's yard precariously. And I was grateful. I found a tree company that had good quality service. The last one I had used did not. The last one I had used had busted one of my windows in my house while they were trying to, and I had to get the window replaced. Terrible customer service, but this one did a great job. It was a gift to find it. Mark, it kind of brings up a thought that I have here that really connects to our stewardship, what we do here at the ministry, is trying to find companies that are doing what you're saying companies need to do. We want to invest in companies that serve the customer. They're not interested in the woke stuff. They're not interested in the nonsense. They're interested in serving the customer. They believe, and maybe they're not Christians, maybe they are, but they have an understanding that the customer's most important, and that there even is a stewardship there, that they steward their customers well.
Exactly. Yeah. And that relationship is important. Yeah. It is so important for long-term success. But that's the thing with business today. Nobody believes there's long-term anymore. The world's going to blow up because of geopolitical things. It's going to blow up because of the environment, all the lies we've been taught.
Virus.
That is don't even go there. We're not going there.
Oh, they already said it's not an issue. Now they're moving on to Ebola.
There you go.
Yeah, because too many people already know what that was all about.
Yeah.
It's just crazy. My guess is there's some opinions out there. I'd love to hear some good news from some people about business. Maybe you've experienced a good business. I want to know about it. Give us a call, 610-363-1110. And remember, this is all about stewardship. We're not trying to downplay things. We're trying to uplift things. Let's try and find those companies that we can uplift.
My life before I met Jesus, I was most of the time afraid. I remember one of my teachers gave the classroom an invitation for Crossroads. When they talked to me about the love of God, I felt a sort of peace in my heart. I will commit myself to learn more about God's Word, to be able to share the gospel to others.
To help reach more kids like Louise with the life-changing hope of the gospel, visit reachOurSchools.com.
Each May, we celebrate Mother's Day and the gift that mothers are to us. This May, you can help make motherhood possible by supporting Preborn. Preborn partners with clinics across the country, providing free ultrasounds and sharing the hope of Jesus Christ with women who are abortion-minded. When you give to Preborn, you're giving these women a chance to choose life. Go to preborn.com/FISM to give today. That's preborn.com/FISM.
The opinions and recommendations expressed on this program do not necessarily represent the opinions of the station or any of the program sponsors. Additionally, all products or services offered by the program sponsors may not be known by the program.
Hey, Mark, one more comment on what we were talking about in that first segment. A lot of industries, like you said, have really suffered, many by their own hand, by this lack of customer service. And one of the big ones, we've seen this in the chat here, is the airline industry as well.
Oh, absolutely.
You cannot get that wrong. I mean, you're flying in a plane. You better get that right. You got people's lives at stake there. But so many of these airlines are now also just ditching customer service for the sake of the dollar, trying to, make things as quick and cheap as possible. And it's sad to see. It really is.
Oh, it is. It is. And everybody's just carpetbagging now. They all want to take every dollar they can drain out of you instead of being a fair value, instead of it being you win, I win. Hey, I need to do some windows replacement. Okay, so you get bids, and it's like, Cindy and I sat with somebody for about 5 minutes. We wanted to replace our front door, and we had this door company come in, and the first quote they gave us, Seth, this is for a front door, was $35,000
for a door.
$35,000
for a door.
$35,000 to put a door in. I don't have a mansion. It's just a door. It's not.
Was it made of ivory?
And I just burst out laughing. He says, "What's funny?" I said, $35,000. Are you crazy? He said, "Well, we have discounts and stuff." I said, "Oh, tell me about that." And he got it down to 20-some thousand. I said, "I really appreciate you coming out, but you're just wasting your time. Thank you so much." And said goodbye and walked him to the door. I said, and I pointed to the door and I said,
this is the door here.
I hope you're not embarrassing walking through a door that is reasonably priced.
Seriously, a door?
Yeah.
What do they sell? Drawbridges too? Moats?
Yeah, I don't know. It was so ridiculous. But everybody is overpricing everything purposely to get all they can while they can.
Yeah.
Under the Biden administration, everybody was stealing everybody blind and getting the government to subsidize that stealing. And now they don't know how to make a profit without overcharging like 10 times for fair work and for fair value. I mean, think about it. I know how long it takes to put in doors. I've done that before. I put in doors. I've done construction. I've done this stuff. We're talking about a half a day to put in a door.
Yeah.
There's no way that the labor is $15,000, $20,000, and there's no way that the materials are $10,000.
Well, the door's made of platinum. The hammers are made of diamonds.
Yeah.
It must have been a really nice door, guys. Yeah. That's crazy. Oh, my golly. Unbelievable. Lord help us. Yep. 610-363-1110. Good conversation, guys. I'm enjoying it. Hey, Mark, the markets yesterday kind of mixed to open up the week. They were really kind of a little bit down with the exception of the Dow Jones. The markets have opened this morning and everything is down as well. Not crazy, but just down, a little bit here. Mark, my question is, we've been talking a lot about market valuation and we're seeing, anytime we have several days of slight downtrends, my first thought is, could we maybe start to be seeing some blue light specials here, or do we need to see it go down a little bit more?
Yeah, both are true.
Okay.
We'll see some blue light specials on the way down, and we'll see some at the bottom as well.
Yeah.
Nobody can predict the bottom of this, but what we're seeing is profit taking. What we're seeing is people moving to the safety of maybe some midterm bonds. I'm thinking that's where most people are moving to and getting 4 or 5% of fairly safe money. So that's what we're seeing. And it makes sense to me. We're seeing people readjust their asset allocation, which is good. We've been talking about this for over 8 weeks now. When we saw the first pullback, before even that, we started saying, get your asset allocation in order. If you have something that's doubled, tripled, quadrupled, lock that in, take those profits and divest into other areas, overweight certain areas if you want to, but get it out of one stock or another and start locking in those profits. Right now, the valuation of the market is up there. It's not at its highest, but you and I were talking, Seth, the other day about the norm of the market. The trailing 12-month is like 19x, and right now, where are we at? 22x in the S&P 500. We also know that the forward P is what? No, that was a trailing. Yeah, that was a forward P. The trailing P is the norm is about 25, 10, 20, 30 year. And we're up in the 30s on that. So trailing 12 months. So the markets are highly valued. At this point, you got to expect markets to pull back. So 2 things to remember about this. Markets do this, no big deal. We're going to go through ups and downs in the markets. No need to panic, but why not lock in the profits while you can? Take them and redistribute, even if it means taking some to a more safe environment, like the money market and or the New Timothy Plan fixed income fund. Now you have a bond fund that a bond ETF you can use to help with your income portion of your portfolio, but not to look at it as income, but more safety with income. As the markets are pulling back, what's better, 5% income annualized or 5% loss annualized? I'm not saying run from the markets. I'm not saying every stock's going to go down, but when the markets get overvalued, you're going to see pullbacks. You're going to see people getting ahead of you and taking their profits, and that's going to force the markets down. Now, granted, we haven't seen any major pullbacks. We haven't seen any big problems with this. We've seen more adjustments, and I think that's great. And I'm encouraging all our listeners, all our partners to be adjusting their portfolios to reflect what their asset allocation should be at this point in time in their life.
You know, Mark, that brings us to a good question. I think it's an appropriate one for what we've talked about on today's show with the bonds and, that relationship with the markets. Stefan is 55, and he's asking, given recent world events, it seems to me like bonds are getting attention. Given the difference between short-term Fed predictions and long-term structure concerns, different bond terms command wildly different premiums. He says the 2-year has more demand than the 10-year and the 30-year. And then he says also partly because of this, bonds are not synced with equities. Does this alter how we, Mark, at FISM will approach them with our portfolios as a separate asset class? What do you think?
Yeah, mostly we don't do bond. We don't go out and research the individual bonds like he's talking about.
Yeah.
This makes sense. Treasury bonds and short-term bonds. One reason people don't buy long-term bonds is because of the fear of inflation. If inflation hits and inflation rates and yields go up, then their bonds will be devalued. And since let's say it's a 20-year or 30-year bond that they're holding, they don't have the redemption quality of a short-term bond at that point to reinvest it. So that's the problem there. The problem on the short end, you got a two-year bond and interest rates head down, and then you got to reinvest it, and you got nothing to invest it in because all the interest rates are so low. So you have the issue on both ends of those. Of course, that's the way you should look at them. One of the things I prefer doing, and I've bought a lot of bonds in my life. I've helped people ladder bonds, do all sorts of things when I was managing money for individuals and corporations. But one of the things I prefer was using the bond people like Victory Capital, who have bond specialists that are managing the new Timothy Plan ETF, fixed income ETF. That's all corporate and government bonds that is being managed by them. So it's a good thing. It's BRI, it's clean, and it's being managed. So when they feel like it's time to get out of longer term to start moving back to shorter term, they're going to do that. You don't have to do all that calculation utilizing that bond ETF, fixed income ETF.
Awesome, Mark. And by the way, folks, the ticker symbol for that's TPFI. That's Timothy Plan's new fixed income ETF.
There you go.
Yeah, there it is. Great stuff, Mark. Hey, Mark, one more thing I just wanted to mention today. We talked about preborn earlier, and I just wanted to say thank you to so many people who have given. And if you have given a gift to preborn, we're not trying to put you in a situation where you can be prideful and ask for glory for yourself. We're actually asking you to just tell us so that we can encourage you. So if you've given a gift to preborn, we want to make sure that we know about it so that we can celebrate you. So you can put it in the chat or send us an email or call in on tomorrow's show. We don't have time today, but we'd love to hear that. Preborn.com/FISM, Mark, is the place to go.
Yeah, and you know what? I get it. A lot of people would rather receive their crowns and receive
I don't blame them
now by giving their name, but it could be anonymous or anything. We see the money coming in. We appreciate that, and praise God for you. I just want to commend you all and say that I am so impressed with what's going on with our partners and preborn. It just tugs at my heart. It causes me to praise God to see so many people who are truly stewards, who realize that everything is His and everything should be to His glory, and you don't have to worry. Just follow God and utilize those resources to His glory, and everything falls in the line and you get pulled closer to Christ. How much more could you ask for? Well, that's all the time we have today, but we're going to be back again tomorrow. So get that phone number in order. Get ready to give us a call. We look forward to hearing from you then. And we look forward to helping you to invest with biblical integrity, help you to love God, show that love for God, and honor Him with your investments. Thank you so much for doing so. Thank you so much for being here with us, and I look forward to seeing you more. God bless everyone.
If we ever forget that we're one nation under God, then we will be a nation gone under.
Thank you for joining us. This has been an FISM production.